begins with a need to move with purpose, to shop without stress, to send without fear, to pay without delay. For every rider chasing time, for every home that needs restocking, for every voice that needs connection, for every dream that needs delivery. Now, one app brings it all together.
Supercab, move smart, ride safe, supermarket, groceries, gadgets, everything. Supercash, airtime, bills, transfers, done. Super logistics, fast, secure, right to your door.
It's more than an app. It's your movement, your market, your money, your connection, all in one place. Supergo, one app, for services, endless. Download Supergo today. Live free, live fast, live smart.
No time to shop, no stress. With Supergo, your groceries comes to you. We partner with trusted vendors, verified stores, no delay, no excuses, just values. Supergo Supermarket, your market now in your hands. With Supergo, your ride is comfortable, easy, and convenient. Supergo is more than an app. It's a movement. Moving people, powering threats, delivering value.
Welcome to Business Daily on SOM TV. My name is Moses Peter. Let us take the major headlines. Dangote Cement opens 100 billion naira commercial paper offer at yield of 17.50% and 19%. Nigeria's bonds and bills strengthen as 6.17 trillion naira excess liquidity triggers yield fall. Bonds, treasury bills, and euro bonds rally amid investor shift towards safer assets. Lagos 200 billion naira bond records 310 billion naira subscription. Now the news in full. Dangote Cement PLC has officially launched its 100 billion naira commercial paper offer, marking the first tranche under its broader 500 billion naira commercial paper issuance program. The offer, which opened on Monday, 17 November 2025, is set to close on Wednesday, 19 November 2025. The CPs are available in two tranches: 181-day Series 1 with 16.10% discount rate, implying a 17.50% yield, 265-day Series 2 with a 16.70% discount rate, implying a 19% yield. The minimum subscription for the offer is 50 million naira, with additional subscriptions in multiples of 1,000 naira. Proceeds from the CP will be directed towards working capital needs according to the company's pricing document. What you need to know: Dangote Cement has consistently demonstrated robust financial performance, positioning itself as one of Nigeria's most stable and profitable companies. Over the last 5 years, the company's revenue has surged from 1.03 trillion naira in 2020 to 3.58 trillion naira in 2024, reflecting an impressive annual growth rate of 37%. This growth has been accompanied by a steady increase in profit after tax, which more than doubled from 276 billion naira in 2020 to 503.25 billion naira in 2024, reflecting a 16.2%. For the 9 months ending September 2025, Dangote Cement's financial performance remains equally impressive. 3.15 trillion naira revenue, up to 22% from from 2.56 trillion naira in the same period of 2024. 1.04 trillion naira profit before tax, a 150% increase from 406.4 billion naira. 743.3 billion naira profit after tax, more than double last year's 279.1 billion naira. Operating cash flows jumped to 1.29 trillion naira, up from 532 billion naira in 9 months 2024. Debt reduction of 47%, with borrowings falling to 1.32 trillion naira from 2.5 trillion naira in December 2024. Interest coverage ratio improved to 4.4 in 9 months 2025 from 3.3 in 9 months 2024, demonstrating stronger capacity to service debt. Despite these strong results, the company did face a decline in production volume in 9 months 2025, indicating that pricing rather than volume growth was a key driver of performance, a potential risk moving forward. Recent assessments from leading rating agencies have reaffirmed Dangote Cement's dominant position in the cement industry while noting some risks. DataPro reaffirmed the company's AA long-term and A1 short-term ratings, citing Dangote Cement's strong brand, solid earnings track records, and experienced management. However, low asset utilization, foreign exchange exposure, and challenges in some Pan-African markets were flagged as risks. CGR Ratings downgraded Dangote Cement to A+ NG from AA+ NG in October 2025, not due to weakened performance, but because of the group cap effects tied to its parent company, Dangote Industries Limited. However, GCR acknowledged the company's strong cash flows and solid earnings, expecting leverage metrics to improve by the end of 2025. Investor takeaway: Dangote Cement's strong financial track record and improving leverage make its 100 billion naira commercial paper offer a compelling investment. With 3.15 trillion naira in revenue and a 150% increase in profit, Dangote Cement shows it can grow even in tough markets. This means steady returns for investors. The company's 1.29 trillion naira operating cash flow in 9 months 2025 confirms it can handle its debt obligations, making the CP offer secure. Borrowings down by 47% and a debt-to-equity ratio of 0.54 show improved financial stability, which reassures investors. Attractive yields: with yields of 17.5% to 19%, the CP offers competitive returns for short-term investors. The drop in production volume may signal pricing pressure over volume growth, which could affect future profitability. Exposure to foreign exchange fluctuations and regional instability could affect Pan-African operations. And the bottom line is, despite the risks, Dangote Cement's strong cash flows and improving leverage make the CP offer an attractive investment for those seeking short-term, high-yield returns. Moving on to the next news, the federal government of Nigeria's bonds, DMO, set to auction 150 billion naira in federal government bonds to investors for February 2020, oversubscribed by investors. DMO suspends April 2020 federal government savings bond offer elevated net liquidity of 16.17 trillion naira, triggered a fall in yields across Nigeria's fixed income market during the week ended Friday, November 14th. Reversing slight increases in rates in the previous week that saw total debt value at FMDQ jump to 91.89 trillion naira, up from about 88 trillion naira. A wave of placements at the standing deposits facility of the Central Bank of Nigeria, CBN, combined with maturities from the open market operation as well as primary market repayments, pushed net liquidity to 6.17 trillion naira, a remarkable 57.80% week-on-week surge. The Nigerian stock market sees red from start to finish, suffers 156 billion naira loss at last trading day of the week. Aradel records 21.4 billion naira deals as Mint stock sell-off triggers 1.26% market decline. Despite the liquidity abundance, the overnight rate edged higher by 13 basis points to 24.9%, though other funding pressures softened as banks had little need to borrow. Yields on the NIBOR and NITTY curves mostly declined, reflecting the ease in system pressures. With upcoming federal government bond coupon inflows of 151.63 billion naira, analysts expect liquidity to remain robust, keeping short-term rates contained. Treasury bills, strong demand pulls yields lower. The secondary Treasury bills market surged with bullish sentiment as investors scrambled to deploy excess cash. Cowry Assets reported that average NTB yields fell 44 basis points, BTS, to 16.98%, led by strong buying interest in the newly issued 5 November bill, which tightened from 15.70% to 15.30%. Condros estimates align closely, putting NTB yield compression to 41 BPS to 17.0%, while OMO yields fell even further, 51 BPS to 21.7%. OMO market activity was particularly intense, driven by excess liquidity. Cowry highlighted the week's star events, the November 13th OMO auction, where the CBN sold 2.55 trillion naira across 2 short tenor bills. Demand was overwhelming, with subscriptions hitting 3.09 trillion naira, a staggering 515% over subscription. With the DMO set to auction 700 billion naira in NTBs on 19 November, analysts expect demand to remain feverish, supported by fresh inflows and anticipation of continuing inflation moderation. Nigerian bond market sees renewed confidence. The secondary bond market closed the week strongly bullish as investors sought safer yield amid volatility in equities and other high-risk assets. Both Cowry Assets and Condros Research reported widespread demand across the curve. Average federal government bond yields fell 20 BTS to 15.6 to 15.57%. The short and mid segment saw the sharpest contractions, driven by strong buys in February 2031 42 BTS and April 54 BTS. Long-term yields held steady, though demand remained healthy. Analysts attribute this rally to improved fiscal signals from the federal government, steady monetary conditions, and the relative attractiveness of Nigerian sovereign assets. Looking ahead, yields are expected to maintain a gradual downward trajectory, with the approaching November 2025 Eurobond maturity likely to intensify investor interest. Eurobonds extend gains on strong external sentiment. Nigeria's sovereign Eurobonds continue their upward momentum, with the average yield declining 21 BPS to 7.77% week on week. This reflects a renewed appetite for Nigerian risks in global markets and aligns with improving domestic fundamentals. The compression in Eurobond yields suggests investors are increasingly willing to accept lower returns in exchange for perceived stability. Forward rates, however, saw mild depreciation across tenors, indicating cautious hedging by market participants. A market riding the wave of liquidity and confidence, both Cowry Assets and Condors Research agree that Nigeria's fixed income universe is poised for continued strength, with massive inflows easing inflation expectations and sustained investor demand across NTBs, OMOs, bonds, and Euro bonds. Yields are likely to trend lower in the near term. The expected 2 additional OMO auctions next week underscore the CBN's intent to manage liquidity while sustaining market stability. For investors, the week's development reinforced the strategic case for Nigerian fixed income assets as defensive plays amid broader market volatility. Moving to the Lagos State, has concluded the book build for its latest bond issuance, with the 2 tranches recording significant oversubscriptions. The state offered a 200 billion naira conventional bond and a 14.8 billion naira green bond, both of which are significantly oversubscribed. The conventional bond, which is the largest ever issued by a non-corporate subnational in Nigeria's history, attracted subscriptions totaling 308 billion naira, representing a 54% oversubscription above the initial offer. Lagos State is the first subnational government to issue an impact climate bond. The green bond attracted 28.7 billion naira, 94% above the initial target. Lagos State Governor Mr. Babajide Sanwo-Olu said the oversubscription was a reflection of the global confidence in Nigeria's economic, fostered by the bold reforms initiated by President Bola Tinubu, especially coming on the heels of the recent oversubscription of the federal government's Eurobond. He said, "In Lagos, ours is a testament to our resilience and the unwavering support of our private sector partners who believe in our vision of building Africa's model megacity that is safe, secure, and functional." We will go on a short commercial break, and when we come back, Business Daily continues. Don't go anywhere. Stay tuned.
Every day begins with a need to move with purpose, to shop without stress, to send without fear, to pay without delay. For every rider chasing time, for every home that needs restocking, for every voice that needs connection, for every dream that needs delivery. Now, one app brings it all together.
Supercab, move smart, ride safe, supermarket, groceries, gadgets, everything. Super cash, airtime, bills, transfers, done. Super logistics, fast, secure, right to your door.
It's more than an app. It's your movement, your market, your money, your connection, all in one place. SuperGo, one app for services endless. Download SuperGo today. Live free, live fast, live smart.
No time to shop, no stress. With SuperGo, your groceries comes to you. Partner with trusted vendors, verified stores, no delay, no excuses, just values. SuperGo Supermarket, your market now in your hands. With SuperGo, your ride is comfortable, easy, and convenient. SuperGo is more than an app. It's a movement. Moving people, powering threats, delivering value.
Every day begins with a need To move with purpose, to shop without stress, to send without fear, to pay without delay. For every rider chasing time, for every home that needs restocking, for every voice that needs connection, for every dream that needs delivery. Now, one app brings it all together.
Supercab, move smart, ride safe, supermarket, groceries, gadgets, everything. Supercash, airtime, bills, transfers, done. Super logistics, fast, secure, right to your door.
It's more than an app. It's your movement, your market, your money, your connection, all in one place. Supergo, one app for services endless. Download Supergo today. Live free, live fast, live smart.
No time to shop, no stress. With Supergo, your groceries comes to you. Partner with trusted vendors, verified stores, no delay, no excuses, just values. Supergo Supermarket, your market now in your hands. With Supergo, your ride is comfortable, easy and convenient. Supergo is more than an app. It's a movement, moving people, powering threats, delivering value.
Welcome back. We are glad you are still there with us. Moving on, Nigeria's inflation drops at 16.05%, record 7th consecutive month of decline. Nigeria's inflation eased for the 7th straight month in October 2025, dropping to 16.05% from 18.202% in September, according to the latest Consumer Price Index report released by the National Bureau of Statistics on Monday. The new figure represents a 1.96% decrease, strengthening signs that inflationary pressures have continued to cool since April 2025. On a year-on-year basis, headline inflation fell by 17.82 percentage points compared to October 2024, when it stood at 33.88%. However, month-on-month inflation slightly increased to 0.9% in October, up to 0.21 percentage points from the 0.72% recorded in September. Food inflation dropped significantly to 16.05%, record 7 consecutive months of decline. The food inflation also experienced a significant decline, easing to 13.12% year over year in October 2025. This marks a sharp reduction of 26.04 percentage points from the 39.16% recorded in October 2024. The NBS noted that part of the decline is due to the new base year adopted for computing the CPI. But month-on-month food inflation rose to minus 0.37% in October, an increase of 1.21 percentage points from September's minus 1.57%. The Bureau attributed this rise to increases in the average prices of onions, fresh fruits such as oranges and pineapples, shrimp, groundnuts, vegetables, including ugu and okazi, and various meat products, including goat meat, cow tail, and liver. The average annual food inflation rate for the 12 months ending October 2025 stood at 21.96%, which is 16.16 percentage points lower than the 38.12% recorded in October 2024. Urban inflation slows dipped to 15.65% year-on-year in October 2025, down by 20.73 percentage points from the 36.38% posted in October 2024. On a month-on-month basis, urban inflation rose to 1.14%, slightly higher than the 0.74% recorded in September. The 12-month average for urban inflation stood at 22.68%, in a 11.84 percentage point decrease from the 34.52% recorded a year earlier. Rural inflation continues downward trend. Nigeria's inflation drops to 16.05%, record 7th consecutive month of decline. Rural inflation followed similar pattern, falling to 15.86% year-on-year in October 2025, 15.73 percentage points lower than the 31.59% recorded in October 2024. That is the end of the news. Here is a recap of the major story. Dangote Cement opens 100 billion naira commercial paper offer at yield of 17.50% and 19%. Nigeria's bonds and bills strengthen at 6.17 trillion naira, excess liquidity triggers yield fall. Bonds, treasury bills, and euro bonds rally amid investor shifts towards safer assets. Lagos 200 billion naira bond records 310 billion naira oversubscription. Thank you for watching. I am Moses Peter. Goodbye.